I'd like to introduce you to Melanie Stockigt from the Tantalum IDS Fusion Retail Hedge Fund. Established in 2006. Greetings, I'm Andrew Ludwig from BLACK ONYX Alternative Investments, where we bring you face-to-face with some of South Africa's most talented boutique asset managers and industry stakeholders. Great pleasure to introduce you to Melanie Stockigt from Tantalum Capital. Melanie, thank you very much for joining us today.
Thank you.
Perhaps you can give us a bit of history on how you got into the alternative investment industry.
Absolutely. So I've always had a love for fixed income through and through. If I think back to how I started my formal career, which was when I left lecturing at university, I was part of the treasury team at Standard Bank many, many years ago. And that was really structuring solutions for asset management clients, which was predominantly in the fixed income space, it really sparked my interest and my passion for the fixed income market in general. And it was a natural progression from that point to join one of my clients at the time, Coronation Fund Managers. Started in the fixed income team, headed up the team after a couple of years, and where I met the rest of the team at Tantalum. And when they started the company, I was very natural progression to join them from that point of view. Our initiation as Tantalum into the investment industry was really as a one-size-fits-all hedge fund product, which really made the most sense to us at the time. What we wanted to do, leaving an established institution such as Coronation and starting a new venture, we really wanted to manage our own money according to the most intelligent way and as wide a mandate as possible for our own investments with a slightly longer term time horizon. And that naturally then made us navigate into the hedge fund world, which was very exciting. And I think from an alternative investment point of view, heading back a couple of years ago into the long-only space, why that was so important for us, I think, as investment professionals, was that it really altered the way that we thought about investing, the timeline of investing, as well as the risk management of investing over that period of time. And I think that as investment professionals, that was a very important learning curve for us, where we actually started to think, without the luxury of hiding behind a benchmark, every investment has to stand on its own 2 feet from a cash plus point of view, which sounds so obvious, but I think it was a very interesting learning experience for us. Benchmark completely taken away, so there's no luxury from that point of view. And also thinking almost equally about the risk of an investment that goes hand in hand with the return thereof. And I think that from Alternative Investment Management 101, I thought that was very, very important, watching how the team developed and learned throughout those periods of time. So going back into long-only space, we can take all of those learnings and apply those naturally in the long-only world, which I think is very useful for us.
Can you give us a bit of detail on the firm and the strategies that Tantalum represents?
So Tantalum Capital, we currently are a 16-strong man and woman team, of which 10 of us are on the investment side. So there's myself heading up fixed income. I have a fixed income team. I have a fixed income analyst who's joined us about 1.5 years ago, who initially joined us as a credit analyst, but I must say she's completely become a fully fledged fixed interest analyst over that time. And is a very useful addition to our team. We're also backed up by a dedicated trader or dealer who's our eyes and ears to the market when we can't be at our desks. And then we very much integrated into the rest of our team. So we have a fully fledged team of equity analysts who assist Rob. Rob is my co-portfolio manager in all of the portfolios, and he's responsible for all of the equity ideas. And I think what is quite useful when one looks at Tantalum is firstly that which I think is quite unique for a boutique. We have very strong disciplines both on the equity side as well as the fixed income side, which I think is a luxury most of the larger houses have as opposed to the boutique managers. Myself and Rob, and then Mike Lawrenson, who assists Rob on the equity portfolio management side of things, we've worked together all the way back from 2002 in our Coronation days, which is a very long time, I think, for investment individuals to work together side by side. And I think why that's quite unique in a market such as South Africa is that what that brings to our team is that we've seen many cycles together. So South Africa, given the rand volatility and being a small, open, emerging market economy, certainly have been some very volatile investment cycles. And we've worked together hand in hand and side by side throughout all of those times. And we've learned some very interesting lessons along the way, and we've learned them together. And I think that certainly stands us in good stead, particularly when one looks forward in terms of the political dynamics and the rand and emerging market and commodity dynamics that we're faced with today. I think that certainly stands us in good stead in weathering the storm that is yet to come.
Melanie, could you give us a bit of detail on your fund specifically and how it differs from other alternatives that are out there, as well as the mainstream investments?
So all of our fixed income investments at Tantalum are managed on the same principles and guidelines. The differences between the funds are just the broadening or scope of the mandate and the different types of investment universe that we might be exposed to. So if we start with our basic fixed income philosophy, we have 6 broad building blocks that we utilize, but our first point of departure is always understanding where we are in the fixed income cycle. So we call it both the top-down as well as the bottom-up analysis. And from a top-down point of view, you can't really invest in bond investments or fixed income investments without having a very clear idea of where you think you are in the interest rate cycle, where you are in the inflation cycle, and other dynamics that affect the bond market, such as external deficits, such as current account deficit, the fiscal deficit, and we obviously operate in a global world, so where the risk-free rate is, US yields, European bond yields, and the direction that those might be moving towards. So we take all of those factors into consideration, and our first decision we make is how much duration or interest rate risk we would like to have in our portfolios. We then apply what we call our bottom-up analysis, and we have 6 broad building blocks that we utilize, and we actively shift the composition of the portfolios based on our top-down view across those building blocks. And very briefly, what those building blocks are is we start at the very short end of the curve, which is essentially a money market curve we set going out to 3 years, where we determine if the interest rate cycle being priced into the market at this point of time is appropriate relative to what our view is, or if there's possibly a risk premium that we can take advantage of in the short end of the space. We then look further across the bond yield curve. So in South Africa, we're very fortunate as investors. We've got a very deep, liquid, and very long-dated bond yield curve, which obviously gives one lots of ample opportunities to take advantage of at different points in the cycle. So we spend a lot of time thinking about where we think fair value is across the curve and how we think the curve shape is likely to move in the coming year to 18 months. Our third broad building block is credit. So within any fixed income fund, I think it's very useful for one to enhance one's running yield, or the return, the annualized cash return you can get out of your portfolio, by including credit. But as we're a smaller team, we naturally navigate to using the strength of our team. So we've got a very, very strong equity skill set within our team. So when we pick credit, we allocate credit within our portfolios, we rely extensively on our own research within the fixed income team, but also the learnings and experience that the rest of our analysts have. So we generally migrate towards the types of corporate bonds or credit issuance that we have very long history with as a team. We know management, we have access to financial information, and we understand how those entities as issuers operate throughout different cycles. Moving on from credit, our fourth building block would be inflation-linked bonds, which, given that we run multi-asset income funds, we can either completely include or exclude that as a building block, or any of our building blocks at any point in time. And inflation-linked bonds can be very useful, either as an alternative to nominal bonds, if we think that the expected returns on inflation linkers will perform very well into a rising inflation cycle, or alternatively, and it's actually how we've been represented for some time in the funds, when we think that there's reasonably cheap insurance that one can put in one's portfolio against any adverse inflation cycle that might unfold. So very useful building block to have at different points in time. Moving beyond those basic 4 fixed income building blocks, we also in our fixed income funds include allocations towards what we see as proxies for fixed income investments, and those two would really be listed property and preference shares. Once again, we can either fully include or exclude the building block depending on our expected returns for each of those. And listed property is generally in larger teams has its own dedicated analysts attached to that. Now at Tantalum, from the very beginning, we claimed ownership of that sector within the fixed income part of the team. And the main reason for that is when we talk about fixed income, it's very much focused on macro drivers. So what's happening in the real economy, what the drivers are in the real economy. And listed property gives you such an interesting window into what is actually happening on the ground. Whether it's in the retail part of listed property, commercial, being offices, or industrial, it gives us such valuable information which we then use for the formulation of our macro view on the fixed income side. So we found that is a very valuable addition as a building block. In addition to that, listed property does exhibit very similar characteristics to long-dated bonds over time as well. So we will very often include listed property instead of bond investments for different parts of the portfolios, and vice versa, depending on what the relative returns are over time. Preference shares also is a proxy for the shorter dated part of the yield curve. Once again, we don't have to include those if we feel that the risk-return characteristics aren't attractive relative to other asset classes in the market, and those weightings rise and fall over time depending on where we are in the preference share cycle. Taking all of that, we then do our bottom-up analysis where we forecast total returns for each of the building blocks, and we build a portfolio that matches our required duration at any point in time across quite a wide universe. If we then take those basing building blocks or multi-asset income fund approach to portfolio construction, depending on the mandate, for example, our Tantalum IDS Fusion Retail Hedge Fund, it has a slightly wider application of those building blocks, so our mandate is slightly wider. And what that means essentially is that we can go long and short different aspects of those. So just a couple of basic examples there. If we have a particular view on the bond yield curve, we can go long one part of the curve and short another part, just to be able to capture the relative move in two different parts, which is something that's very difficult to do in a traditional long-only fund. In addition to that, if we have to look building block by building block, for example, listed property, we could go long, short, two different shares in the property sector. As an example, long redefined, short growth point, if we think that the relative ratios are quite stretched, and understanding the bottom-up investment cases for each of those stocks, that's a view that we can take with reasonably high conviction. We could also look across building blocks. So one example there would be able to go long growth point, but hedge some of the duration risk out by going short longer dated government bonds. And those are the types of at-the-margin trades that within a hedge fund environment certainly makes sense to generate additional returns, but also to protect the downside risk in the portfolio to a greater extent that might be available elsewhere. Having said that, though, we are traditional fixed income investors, and so when we construct any of our fixed income portfolios, it is with a more conservative mindset. And if I look at some of our the peer asset managers, our competitors within the market, everyone has a different type of investment proposition on the fixed income hedge fund side. Ours is on the more conservative spectrum of that. So we are trying to generate cash plus 2 to 4% returns throughout different cycles, and we're certainly not going for the very highly geared, highly leveraged returns that some of our competitors have. And another point of departure might be that just as we are conservative with our interest rate risk in our portfolios, we are reasonably conservative with our credit risk at the same time. So we like fully diversified credit portfolios. We navigate or migrate to the higher quality end of the spectrum, given our investment strategy and our investment style. And so understanding there's a trade-off between liquidity and the credit spread that you earn on a corporate bond investment, we cater for that in a more conservative way in our portfolios than some of our peers. And that, I would imagine, is one of the differences that you might find in our type of hedge fund versus some of our peers in the market in the alternative investment space.
Melanie, thank you very much for joining us and giving up your time and sharing a bit of detail on your background, the firm and your strategy. And thank you for joining us at Black Onyx. More details on www.blackonyx.co. We look forward to collaborating with you. Black Onyx is an authorized financial services provider and warns that there are risks associated with financial products, and past returns do not guarantee future performance. The purpose of this content is to present different regulated asset management strategies, overseen by regulated firms and individuals, whose opinion may not necessarily be shared by Black Onyx and or the members of the public. No information or opinions contained in these interviews constitute a recommendation or invitation in any jurisdiction to invest or otherwise deal in alternatives and traditional investments as represented by Black Onyx.